Most first-time home buyers in Abu Dhabi think that the hardest part is saving for the down payment. But that's not what really holds people back from owning a home here. It's the confusion, the hidden fees no one mentions, the legal steps that sound simple but are not. You hear terms like MOU, valuation, final offer, municipality transfer, and suddenly you're overwhelmed and afraid to make a mistake. The biggest hidden mistake, focusing on the property, not the process. That's how buyers lose deposits, miss deadlines, or get stuck with contracts they regret. But what if I told you the home buying process in Abu Dhabi actually follows a clear, step-by-step system, a roadmap that takes away the guesswork completely? The problem is most people never see this roadmap. Not even many agents explain it properly. That's exactly where costly mistake happens. Hi, I'm Duke. I'm a licensed real estate agent here in Abu Dhabi, a proud member of National Association of Realtors, and certified CIPS, SRS, and ADR specialist. And in this video, I'll walk you through step by step through everything you need to know to buy your first home in Abu Dhabi. Because buying your first home in Abu Dhabi isn't about luck, it's about having a plan. So before you even scroll at Property Finder or start viewing properties or talking to agents, let's start with step 1. Making your plan. A smart plan, one that covers your finances, your timeline, your backup options, and your location. Let's break that down step by step. First, plan your finances. Let's start with the most important, your money. Buying a home isn't just about affording the price. It's about affording the lifestyle after you moved in. So ask yourself, how much can I really afford monthly without eating instant noodles for the next 20 years? Or how much savings do I have right now? How much will I have to put down as my down payment? Do I need a mortgage? And if yes, what's the maximum loan I can qualify for? Now, here's what most first-time buyers in Abu Dhabi don't realize. If you're buying a property under 5 million, you need to put down at least 20% as your down payment. If it's over 5 million, it goes to the 30%. And the bank, they can lend you up to 7 to 8 times of your annual salary. But that depends on whether you've got other loans or credit cards floating around. Don't forget, there are extra costs when buying a home, usually around 4 to 5% of the property price. This can include first, ADM registration fee, which is 2%. Second, agent's commission, which is 2% plus VAT. Third, service charges prorated depending on the property or developer. Fourth, conveyancing fees or paperwork fees around 8,000 dirhams. Fifth, mortgage registration fee of 0.1%. And lastly, your utility deposit to get your electricity, water, and internet connected. And don't forget movers, furnitures, or other personal setup costs. Most importantly, always leave a financial cushion, at least 3 to 6 months of living expenses after your purchase. Because owning a beautiful home is great, but if you don't have enough cash for daily life, bills, or emergencies, it can quickly become stressful. Think of it as buying or having a home you love and money left to live comfortably. Second, let's talk about your timeline. Many first-time buyers underestimate how long it really takes to buy a home in Abu Dhabi. On average, the process from signing the contract to getting your keys takes about 45 days, though it can be faster or slower depending on the bank approvals, valuations, and developer paperwork. The key is to plan backwards. So, if you're renting, when does your lease end? If you're getting married or expecting a baby, when do you need to move in? If you need a mortgage, start pre-approval before you even view properties. Having a clear timeline protects you from rushing into wrong decisions and from missing out on the right one, because a home should bring security and joy, not stress and regret. Third, plan your contingencies. Now let's talk about something most buyers forget. Contingencies. It's simple terms, that's your plan B. What if your mortgage takes longer than expected? What if your job changes halfway through the process? Or what if the seller suddenly backs out? These things can happen And they do. That's why it's so important to plan for what could go wrong so nothing derails your dream home. Keep a backup property in mind just in case, and talk to your agent, someone like me, about adding the right clauses to protect your deposit and timeline if delays happen. Because buying a home isn't just about hoping everything goes right. It's about being ready even when things don't. Fourth, plan your location. And finally, let's talk about your location. Don't pick an area just because it looks beautiful on Instagram or your friend bought there. Think long-term. Think life. Where do you work? How far are the schools, hospitals, or places you actually go on weekends? And just as important, what's coming next in that area? Is it peaceful now but could get crowded in a few years? Will new towers or roads change the view, the traffic, or even the vibe? These are little things that make big difference later. Every community in Abu Dhabi has its own story. Yas Island, Saidiyat, Al Reem, each offers a different lifestyle, price point, and future potential. If you choose wisely, your location won't just be where you live. It'll be where your investment in your life grows together. So, before you even start browsing listing at midnight, make your plan. Your finances, your timeline, your contingencies, and your location. Because when you plan smart, you buy smart. You've got your plan in place, your finances, your timeline, your backup options, and your dream locations. That's a solid foundation to start with. But here's the truth. Plan only works when the numbers do. Because no matter how perfect that apartment looks online, what really matters is what the bank actually approved. So before you start calling agents, scheduling viewings, take this next step seriously. Get your mortgage pre-approval. That's the point where your plan stops being just an idea and starts becoming reality. What is mortgage pre-approval? This is when the bank reviews your financial situation, your income, employment, existing debts, and overall financial profile to determine how much they're willing to lend you. It's not just a number on paper, it's your financial green light. With pre-approval in hand, you know exactly what you can afford, and every step after that, viewing properties, making offers, and negotiating becomes far more straightforward and confident. Here's the tip. Create a simple Google Drive folder called My Home Buying Journey and drop in the key documents like passport, Emirates ID, salary certificate, 6 months of your bank statement, and payslip. Being this organized makes the bank process smooth. Pre-approval usually takes 3 to 5 working days and is valid about 60 days, giving you a clear starting point of your home search. Getting pre-approved early does these 3 important things. First, shows you exactly what you can afford. Second, lets agents and seller knows you're serious. And third, protects you from the heartbreak, so you never fall in love with a home you can't actually buy. And there are 2 ways to get pre-approved. And first option is go direct to banks. You can approach banks like FAB, ADCB, or ADIB and speak directly with their relationship managers to see what they can offer. The good thing about it, you may find better deal or lower rate. The bad thing is that it can take a lot of time and each banker may give you slightly different information. Option 2, use a mortgage broker. A mortgage broker acts as your personal guide through the process. They compare offers from multiple banks, handle paperwork, and follow up on your behalf. The good thing, it saves you time and stress, and most brokers in the UAE don't charge you. They are paid by the bank. The bad thing is you rely on the broker to represent your best interests, so choose someone experienced and trustworthy. The key takeaway of this is that both options work, but the right choice depends on whether you want to invest your own time or have a professional manage the process for you. So if you got time, you can shop around with the banks yourself. If you want to save your time and keeps your sanity, a broker is your best friend. Once you're pre-approved, congratulations, you're officially a qualified buyer. But don't start calling every agent just yet, because the next step is just as important, finding the real estate agent to guide you through the process and protect your investment. Stick around because this is where your home buying journey really starts. Step 4. Hire your real estate agent. It's time to find your agent, your home buying sidekick. Think of them like Google Maps for real estate. They won't drive for you, but they make sure you don't take wrong turns straight into regret. And here's something most buyers don't realize. You pay that 2% commission whoever you choose. So choose wisely, pick someone who listen, explain, and protect your interests. Because the right agent doesn't show you your properties, they help you find your home. Alright, now that you know the importance of hiring a real estate agent, let's talk about how to choose the right one and what to watch out for. Because not all agents are created equal. And picking the wrong one can cost you time, money, and a lot of frustration. So when you're looking for an agent, focus on these key things. First, experience and credentials. Are they licensed in Abu Dhabi? Do they have certification like ABR, SRS, or are they international property specialists? This shows you understand buyers, sellers, international property standard. Second is the local knowledge. Do they know the neighborhoods you're interested in? Can they explain things like service charges, handover timelines, or capital appreciation in plain language? And third, communication and availability. Do they answer calls or messages promptly? Are they patient, clear, and honest even the news isn't what they want to hear? Fourth, client-centered approach. Do they listen to your needs instead of pushing what's easiest for them to sell? A good agent is like a guide, not just a salesperson. And lastly, fifth, track record. Have they successfully helped buyers like you before? Can they provide references or testimonials? On the flip side, watch for these warning signs. First, pressure tactics. If they're rushing you to sign anything, walk away. Buying a home is serious. It's not a race. Second, over-promising returns. Anyone who guarantees high rental yields or future appreciation, that's a red flag. The market is never, ever 100% predictable. Third, hidden fees. If they're vague about commissions or other charges, ask questions. Transparency is key. Fourth, limited knowledge. If they can't explain fees, handover schedules, or mortgage requirements clearly, that's a warning. And the fifth, ignoring your budget or preferences. If they keep showing homes outside your budget or style, they're working for a sale, not for you. Remember, your agent should earn your trust before you sign anything. The right one will guide you, protect your interests, and make the buying process smooth. The wrong one, you'll feel frustrated, misled, or even lose money. So take your time, do your homework, and choose wisely. Right agent doesn't find you a property. They help you find the right home. Now comes the critical step, finding your future home in 2 parts. Before you get caught up in layouts or views, you need clear checklists. Here's what matters most. First, location. Consider proximity to schools, workplace, hospitals, and essential services. Convenience directly impacts daily life and long-term value. Second, size and layout. Focus on functionality, not just square meters. Ask yourself if the space truly fits your lifestyle. Third, service charges. Understand all recurring fees. A low purchase price can be offset by high service cost. Fourth is parking. Verify all available spaces and accessibility. It's a detail many buyers overlook but has significant impact. Fifth, developer reputation. Research the developer track record. Reliable developers mean fewer maintenance issues and smoother handovers. And lastly, the future value. Assess resale and rental potential. This is your protection as an investment. Before committing, visit the community at different times of the day, like mornings, afternoons, and even evenings. Traffic patterns, noise levels, and activity can change significantly throughout the day. An experienced real estate agent adds value here. They identify opportunities and risks that aren't visible in listings. Take your time, make informed decision. The right property will meet both of your immediate needs and long-term goals. Second, evaluating the property during the viewings. Once you're on site, it's time to assess the property systematically. This is not about first impressions. It's about facts and observations. Number one, structure and conditions. Inspect walls, ceilings, floor for cracks, dampness or uneven surfaces. Check windows or doors for proper sealing and operation. Ask for maintenance record if available. A well-maintained property reduces future headaches. Second, utilities and system. Test water pressure, taps, and drainage. Verify electricity, air conditioning, and other major systems are functional. Ask about the recent upgrades or replacement by the seller. Third, layout and functionality. Walk through every room, visualize daily life, cooking, working, relaxing. Consider storage, circulation, and natural light. Make note of any spaces that may require modification or renovation. Fourth is the security and privacy. Observe entrances, gates, elevators, and building access. Evaluate noise levels and visibility from neighboring units. Safety and privacy are critical for long-term satisfaction. Fifth, community and surroundings. Check common areas, facilities, and amenities. Observe neighbors, traffic flow, and overall upkeep. Visit at different times of the day to access noise and activity levels. And six, documentation and compliance. Ensure the property has proper title deeds and approval. Confirm there are no pending service or utility issues. During the viewing, take notes and photos for reference. Avoid decisions based on emotions alone. The goal is clear. Know the property thoroughly before committing. A careful, structured approach ensures that you select a home that meets both immediate needs and long-term goals. You've identified property you want. Now comes the critical step, making an offer. Your agent will present your proposal to the seller on their risk or their representative. Here's what to expect. Scenario A, accepted. The seller agrees to your terms. This moves you to the next step, drafting the Memorandum of Understanding or MOU. But scenario B, rejected. A rejection is not personal. It's part of the negotiation process. You can revise your offer, adjust terms, or consider alternative properties. The key strategy here is to start slightly below the asking price, enough to leave room for the negotiation, but within the reason. Offers that are too low risk being dismissed outright. Remember, making an offer is a structured negotiation, not a confrontation. Stay professional, rely on your agent guidance, and maintain a clear focus on your objectives. Precision, preparation, and patience are your allies at this stage. Now you have received offer acceptance. The next step is the Memorandum of Understanding, or we call it MOU. This is a formal agreement between the buyer and the seller. Specifies the agreed price, timeline, and penalties. It requires a 10% deposit, typically held by the agency, not directly by the seller. Contains an exit clause. Review it carefully. It protects you if the transaction does not proceed as planned. Important thing, this is not the final contract. Treat it as a binding preliminary agreement. Ensure you understand every clause. If unclear, consult your agent. Do not assume anything. Agents are not mind readers. Proceed only when all terms are verified. Seventh step is the bank property valuation. You're officially under contract. The next critical step is the bank property valuation. This isn't just paperwork. It's a verification of the property market value. The bank hires a certified third-party valuator to inspect the home, check comparable sales, and provide an independent assessment. The cost of this is usually around 2,500 dirhams to 3,500 dirhams, typically paid by the buyer. Here's why it really matters. The bank uses valuation to confirm the loan amount they're willing to approve. If the valuation is lower than your agreed price, you have two options. renegotiate with the seller to adjust the price. Second, cover the difference yourself out of pocket. This step protects you both and the bank. It ensures that you're not overpaying and the bank isn't taking unnecessary risk. Tips for a smoother valuation. Keep the home tidy and functional. Little things like working taps, clean floors, and uncluttered spaces help the valuator see the property clearly. Second, be ready with details on upgrades and renovation. New fixtures, renovated kitchens, or air conditioning units can help justify the value. Third, knowing the neighborhood. Be aware of the recent sales in the area so you understand if the valuation makes sense. And lastly, stay patient. Valuation usually takes a few days. Rushing won't change the outcome. In short, the valuation is a checkpoint. It confirms that your offer aligns with the market, protects your investment, and sets the stage for a smooth mortgage process. Once this is complete, you're one step closer to signing the mortgage and securing your keys. 8. Home inspection. Before property transfer, conduct comprehensive inspection. Even for new construction, a thorough inspection confirms that the property meets agreed standards and verifies that all negotiated repairs and condition have been completed by the seller. Inspection checklist. Structural integrity. Check for cracks, foundation issues, or visible damages. Paint and finishing defects. Functionality of air conditioning, water heaters, and plumbing. The presence of mold or other environmental hazards. For larger units or villas, hire a professional snagging company. Skipping this step exposes you to financial and legal risk. Do not take possession until all system, finishes, and safety standards are verified. This step protects your investment and ensure your property is delivered exactly as promised. Step 9. Final offer or FOL and document preparation. When your mortgage is approved, the bank issues the final offer letter or FOL. This document officially confirms the loan amount, interest rates, and terms. Signing it signals your commitment to proceed with the purchase. Before the property transfer, you must prepare and organize all required documentation. Accuracy is critical. Missing or incorrect documents can delay your transfer. So what are the required documents? First is the NOC from the developer. It's a no objection certificate. Confirms that there are no outstanding obligation and that the property can be transferred. Second, Emirates ID and password for both buyer and seller. Verification of the identity. Third, signed MOU. Confirms agreed terms, price, and timelines. Fourth, original FOL, the final offer, issued by the bank confirming your mortgage approval. And fifth, mortgage documents, all related agreements and conditions from your lender or your bank. Valuation report, confirms property value aligns with the bank approval. Most important thing, manager's check or bank transfer proof, confirms deposit and down payment. Your real estate agent will coordinate the submission and verification of all the documents with the bank, developer, and municipality. As a first-time buyer, this step may seem complex. Your agents ensure nothing missed and deadlines are met. Key point: maintain copies of every document for your record. This protects you in case of disputes or discrepancies. Proper preparation ensures a smooth, on-time property transfer. Number 10. Abu Dhabi Municipality Transfer. This is the final legal step in the home buying process. The official transfer of ownership at Abu Dhabi Municipality or ADGM in Reem Island. This is where the property is legally registered in your name and you become the official owner. Step-by-step process. Document submission. Present all required documents including FOL, signed MOU, NOC from the developer, Emirates ID and password for both buyers and sellers, and valuation report. the municipality will verify all paperwork for accuracy or compliance. Second, fee payment. Transfer fee, 2% of the property value. Administrative fee, usually from 1,000 dirhams to 5,000 dirhams. Mortgage registration fee is 0.1% of the property value. Payments can typically be made via bank transfer or manager's check. Third is verification. Municipality official cross-check all submitted documents with the developer, the bank, and the government records. Any discrepancy must be resolved before transfer can proceed. Fourth, title deed issuance. Once verification is complete and fees are paid, the title deed is officially issued into your name. This document is proof of legal ownership and should be stored securely. Important notes for first-time buyers. Ensure all conditions agreed upon with the seller and developer are completed, before arriving at the municipality transfer. Double-check documents completeness. Missing or incorrect documents will delay the transfer. Coordinate with your agent to streamline the process. They ensure deadlines are met and required are fulfilled. Completion of this step confirms you are the legal owner of the property. Only after this step can you proceed to the handover of the keys and take physical possession of your new home. And lastly, key handover. After the Abu Dhabi municipality transfer is complete and the title deed is issued, the next step is to hand over the keys. This is when you gain physical possession of the property. Step-by-step key handover process. Coordinate with the developer or the seller. Confirm the date and time for key collection. Verify property condition. Walk through the property to ensure all agreed repairs, finishes, and snagging items have been completed. Third, check utility and system. Confirm electricity, water, air conditioning, and other critical systems are operational. Fourth, document handover. Sign the key handover receipt, which records the date, time, and condition of the property at the transfer. Keep a copy for your record. And fifth, take possession. Only after verifying all systems and conditions should you take control of the property. This ensures you receive the home exactly as contracted and protects your investment from future disputes. Key point: treat this step as an official handover, not just a symbolic gesture. Confirm everything is in working order before living with the keys. This concludes the home buying process in Abu Dhabi. From planning your purchase, hiring an agent, property viewings, offer acceptance, MOU, bank valuation, home inspection, final offer letter, municipality transfer to key collection. Each step is designed to protect your investment and ensure a smooth, legally compliant transfer. For first-time homebuyers, follow each step carefully. Skipping steps can create risk. Keep complete documentation. It is your proof and protection. Verify all conditions before signing any document or taking possession. Once the key is in your hands and the title deed is issued, you are the legal owner of the property. This is your confirmation the home is yours. Plan your move, secure your asset, and take full control of your investment. This is the complete journey, from dreaming your home to closing the deal and holding the keys. If you found this guide helpful, hit like and subscribe for more Abu Dhabi real estate insights and tips. And if you're buying a property here, if you want someone to guide you through every step of the process, I'm here to help. Thank you for watching. Enjoy your first home. You've earned it. Until next time, I'm Duke, your trusted real estate guide. Zero pressure, full authority, and touch of clarity to make your journey simple.